Is now the time to finally believe that banks are embracing and integrating this digital revolution?
Absolutely. We think that U.S. banks are on the cusp of the biggest impact of technology on their business in history, and that should be a win-win-win for the customers, better service for the employees, more time to do what they want to do, talk to customers, and for shareholders, the most efficient banks in history, at least a few years out.
Mike, you're wearing a hoodie, so if you're a bank analyst, you wear a suit and tie. Are you now a tech analyst?
Well, I don't think you can be a bank analyst without being a part-time tech analyst. I don't think you can be a banker without having your tech analyst hat on. I think to have banking, you need to have technology. Oh, and by the way, the biggest purchaser of technology services of all industries, the banking industry, spent $150 billion over the past year just on technology. So, you know what? If it doesn't work for banks, it's not going to work for tech. But we think this is the start of not only a beautiful friendship, but the most serious marriage that's ever taken place between banking and technology.
You know, Mike, we're on these analyst calls. I think of Bank of America in particular, highlighting the increased use of payments on Zelle, mobile banking. What area within technology is really transforming banks? Is it peer-to-peer banking?
Well, you know what? Bank of America, you can say, who's going to win, banks or fintech? Well, fintech's going to win. And you know who that is? That's Bank of America mobile banking. In 7 years, Bank of America took from nothing to mobile banking, where they process a level of deposits equal to the 7th largest bank, equal to 1,500 bank branches. That's phenomenal. That's a phenomenal story. In addition, Bank of America, over the last few years, has increased throughput in a variety of ways. Mobile banking, ACH payments by 50% or even more. And at the same time, they've reduced their technology expenses for their infrastructure by $2 billion. So you're growing the franchise without growing expenses, and the reason, it's due to technology. So again, it's a fantastic marriage between tech and banks, such as at Bank of America.
So, Mike, if Bank of America is the winner, who's the loser?
Well, you know, a lot of banks are, stuck in an old mindset, a last century mindset. And so you have the largest banks, the scale providers. I mean, JP Morgan, Bank of America, Citigroup, the Goliaths are winning. And you also have the smaller banks, which have specialized services, face-to-face, relationships. They're friendly with the town council and the clubs. But I think other than that barbell approach, those banks in the middle, have a lot of soul searching to do because they don't have the scale to compete with the biggest banks. They don't always have the one-on-one service of the smallest banks.
Mike, we started off this segment talking about a company, U.S. Bank. It's cutting back on some of the branches as it's transitioning to the digital age. Is that the right strategy, or should banks be increasing their presence but hook me in via digital? Well,
look, I mean, banks don't have a choice. The world is going in the direction of technology, and banks are going along for the ride. They might not be leading. I think the banking industry, they have been a laggard, and that's out of safety and security for the customers and dealing with regulators. But we forecast a loss of jobs in Wall Street and the banking industry of 200,000 over the next decade, and that's due to automation. Any job that can be automated should be automated. Having said that, the jobs such as advising or technology or anything, dealing with customers, those jobs should be expanding while you streamline the back office.
Mike, we love running marathons, so anytime I can read a research note of yours that combines the analogy of a marathon along with financial analysis, you are always welcome back. So saying that, why do you say that we are only on the 2nd or 3rd mile of what is a marathon? Well,
here in New York City, we are about to have the New York City Marathon. And that's a very big event, as you can see. But look, when you look at, artificial intelligence, big data, I mean, banks are hardly scratching the surface. It's an archaeological dig to unlock the data they have on customers. I mean, now in Bank of America, again, they took the number of fields to fill out for a mortgage application from 200 down to 10. That makes your life a lot easier, but that's just the beginning of using big data to make customers' lives more efficient and effective. The whole payments revolution, that's changing the reduced use of cash, and just generally faster processing of computers should allow banks to operate much more efficiently. So you have a combination of software-driven changes such as AI and automation. You have hardware-driven changes due to faster processing and more efficient data centers. Then you have the whole payments revolution. You add it all up and we get the most efficient banking industry in history 5 years from now.
Mike, 20 seconds. Do banks acquire fintech or build out their own platform?
Fintech, friend or foe? Both. Banks will be buying some more fintech players, so link and leverage strategy, but they'll also be doing a lot more in-house.